All right. Part 2. Okay. Your bank will take that debit against your account first so they can charge you the $35 overdraft fee. And all of a sudden, you look at your bank account and you think, okay, I see the $50 charge. I see the $100 check. And I see my deposit, but I see that I'm $35 lower than I should be. Why is that? The money was there. Yes, the money was there. But the bank decided, since the check came in, they're going to do that first. I've even had this happen. I have gone online and paid 5 bills, small ones, and had the money in the bank to handle those. Okay? And then, for some reason, a larger bill hit. They take the larger one first so that, no, you won't just have one overdraft fee. You're going to have 6. You're going to have 6 overdraft fees now. This is called legalized theft. Now, there's a new thing that the banks have, and this was part of the terms and agreements that I had to agree to, or call my bank and tell them to get me the hell out of it ASAP, which is what I did. I got some muck that didn't even know what the hell I was talking about when I called the bank. It is called, and make sure you get yourself out of this, folks. It is called courtesy overdraft protection. It is a very misleading thing. What happens, let's say you go to a store and you go to make a purchase and you hand them your debit card, but you have no money in the bank. What happens is it comes up and it says decline. That means you do not have significant funds in the bank to pay for that item. Which is a good thing. That way you do not incur an overdraft fee. Courtesy overdraft protection would let you make that purchase. And this is why it's misleading. A lot of people think, oh, it's a good thing. No, it is not. It's a bad thing. And I told them to get me out of it ASAP. And they said, yes, sir, Mr. Howlinblind, we can do that, and we will now. I said, do it now. Let's say you go to a store and you want to make a purchase of a box of cigars and they're $100. But all you have in the bank is $50. They swipe your card with overdraft protection, courtesy overdraft protection, that goes through. And you think, oh, great, I got my cigars. 2 days later, you get a little thing in the mail that says, well, actually, I think it's 3. You get a little letter in the mail that says you're overdrawn by $50. Plus now you owe us $35. So that $100 box of cigars costs you $135. Plus $6 a day for every day that your account stands overdrawn. That doesn't sound like overdraft protection to me, folks. It sounds like more lying, legalized theft. Overdraft protection should be, we will not allow you to go over the amount of money you have in your account to cover. And here's what gets me. If they do return a check and tell people, no, you don't have enough money in here, they will still charge you an overdraft fee. That's wrong. Now, I have mentioned before in another video, and I want to make it perfectly clear, that I am not making this stuff up. I want you to double check me. If you could prove me wrong, leave me a comment on my video, because I do not disable comments. Leave me a comment saying, Howlinblind, you're full of shit, and here's the proof. But if you can't prove me wrong, which you won't be able to, because what I'm getting ready to tell you is the exact God's honest truth, Banks should not be allowed to charge an overdraft fee. If you're 1 penny over, they will charge you at least $35. If you're $1,000 over, so if you know you're going to go overdrawn, please take it to the limit. Write a $1,000 check. It's still going to be the same $35 overdraft fee. That sometimes can work out to be a 380% interest rate on that small loan. Because it's a loan. If the bank says, we'll throw the penny in, Howlinblind, we'll pay it for a fee, is actually an interest rate. It's a $35 fee for a penny. $35 fee for $1,000 if you go over. So, like I say, if you know you're going to go over big time. Banks should not be allowed to charge an overdraft fee, because if the banks had to pay back today, this very second, everybody walked into the bank and said, I want to withdraw all my money. The banks couldn't do it. They would close their doors and they would go bankrupt. Because the banks don't have your money in the bank account. All they are required by the Federal Reserve, hang on, let's see what happens to I got. All they are required by the Federal Reserve to hold in reserve of your money is 10%. This is why direct deposit was created, folks, from your work to your bank, and you don't even get a paper check anymore. I still do, and I love it. And I'm seriously thinking about doing away with my banks, just getting out of the banking 100%, because I can cash my check at work. My boss would do that. But you put $1,000 in the bank. All that bank is required to hold in reserves to give you back your $1,000 is 10% of that. That's $100. Well, what do they do with the other $900, Howlinblind? Do they loan it out? No. They can create, due to the mechanics of mechanics of modern money. If you type it in Yahoo, you'll get a PDF file come back. It'll either say the mechanics of modern money or modern money mechanics, one of the two. And it explains how they can create 9 times that amount in fake money that does not exist to loan to somebody else who may then, okay, let's say then, I put $1,000 in the bank. They hold $100 to pay me back. They take the other $900 and multiply that, and then that money gets deposited, and then they can do the same thing. So actually, they can create up to 10 times the amount with nothing to back it up. No real money to back it up. I'm almost to 10 minutes, so I'm going to stop and we'll do part 3.